Morning everyone, welcome to Ainsley News. It's Monday the 13th of September. Today we're talking 10 years of negative returns, or the tipping point. Wall Street had another bad night Friday night, capping off the worst week on the S&P 500 since mid-June and the first 5-day losing streak since February. The question, of course, is where to from here. As a reminder, we are in the guts of September, historically the worst month for shares. The VIX surged back above 20 as fear spread. Major investment houses continued to shout warnings about a correction, with Deutsche Bank's chief equity strategist calling most valuations historically extreme and spelling that out. Trailing and forward price to earnings, enterprise value to EBIT or EBITDA, or operating cash flow are all well into the 90s in percentile terms. High valuations are broad-based across sectors, and median company valuations are high. Societe Generale have their proprietary multi-asset risk indicator, and despite us being at all-time highs, it just went into danger zone of their deep risk off or selling territory for the first time since 2012. Euro banking crisis kissed it, and the GFC plumbed it. We spoke about market breadth there, and warning continues to flash as the price and breadth continue to extend their divergence, making for a very precarious market. And so we find ourselves seemingly at this critical juncture that many have speculated around. If indeed reality has finally caught up with this market and we have a major correction, what then? Bank of America look at the price to normalized earnings of the S&P 500 and then what that means to the subsequent 10 years of returns. For the first time since the dot-com bubble, it is now forecasting negative returns for the next 10 years if you bought into the S&P 500 now. Critically, this model saw through the GFC and on the back of the Fed unleashing QE. It highlights the extent to which this market is distorted and the losses that can befall of investors who think such gains can go on forever, and that over the long haul, shares always go up. Aussies, without the Fed's QE, took over 10 years to regain losses of the GFC. But, and that's the 8.5 trillion but, will the Fed and the US government really allow the US share market a negative return for a decade? Clearly not, and that is where gold and silver become particularly enticing, and not just from a traditional safe haven perspective. Beyond that, there is already a surge in recognition around monetary debasement and a system hurling toward the reckoning. What the reckoning is anyone's guess. However, this system cannot keep adding more and more debt to already record levels, print more and more currency, and inflate every soft financial asset, nor even hard assets like property, well beyond valuation fundamentals, with zero interest rates forever. At some stage, maybe this time, when the Fed start buying shares like the Bank of Japan were forced to do, there will be a rush for the door as it all implodes on a loss of confidence. This is a critical piece in the investment thesis for precious metals, and one Mark Mobius spoke to recently. If there are around 300 trillion of these soft assets in the world, and even a fraction of them try to get into the hard asset, valued at 1.5 trillion investable gold space, or just the $50 billion silver space, neither the door nor the room beyond it can even fit a small fraction. Only huge higher prices increase the size of these two rooms. And that's news for today, everyone. Thanks for joining us. Great insight there into what we could potentially be looking forward to in Australia and the US. No one wants to survive 10 years of negative returns. Remember, jump over to ainsleyBullion.com.au for all things physical, gold, silver and platinum. Releasing our Tiger today, so go and check out those new coins there for this lunar year release. Jump over to ainsleywealth.com.au for all things cryptocurrency. All those large cap cryptos there available for you. And check out goldsilverstandard.com. Our own crypto, perfect stablecoin, built and backed by real gold and silver. Enjoy your Monday and the start to the week, everyone. We'll catch you tomorrow for more news.